This week's real estate tip of the week is, where do you get the money to start investing in real estate?
Yeah, so we want to do something exciting. We all need money to do many things. And if you're thinking about investing in real estate, you definitely need money to invest. Now, Tim, there are such things as no money down deals. We can talk a little bit about that briefly. But Tim, where do people find the money to invest?
So there's a number of things people can use to start investing in real estate. The first one is cash, right? If you have a little bit of cash for a down payment, that's usually the way most people go to buy a property, whether it's 5% down for a property to live in or 20% down for your first rental property.
Yeah, and the second way would be if you have equity in your own home right now. A lot of people come to us, they either own property, some people come to us, they own land, Tim, they own businesses, and they can pull out equity from their property. That's basically refinancing money, getting a new valuation on the property, pulling out up to 80% loan to value ratio, and using that as a down payment on the next property.
And the third one is RSPs. A lot of people have RSPs. They've contributed them at work or just on their own. There are programs that you can use to pull money out of your RSPs to invest in real estate. Now, you really should talk to an experienced mortgage broker about that, but that's another source of funds that you can use to invest in real estate.
Yeah, and there are a few other ways which we'll just quickly talk about. One would be using a line of credit. Sometimes we send people to go get a line of credit before we actually go shopping for a property if they don't have a down payment. Some other ways are asking your family. We've seen it's happening, Tim, more and more often these days, where people are using their parents, they're borrowing money off them, or friends, or family, or Tim, they're doing joint ventures, if you want to quickly talk about that.
Yeah, joint ventures are pretty much the way that you're going to go after you've run out of financing ability. So the banks will only give you mortgages up to a certain amount or a certain number of mortgages. And it usually has to do with the level of your income, the number of assets that you have. But eventually, most real estate investors have to find joint venture partners. And when you find a joint venture partner, what you do is you partner up with somebody, you either borrow money off of them or they get the mortgage for you, and you own a property 50-50.
Yeah, so if you are sitting here thinking you want to get into investing in real estate and you don't have a lot of cash, there's a bunch of ways. And if that's still stopping you, we've got other ways for you to actually create enough income or enough down payment to move you ahead. We don't take no for an answer. And if this is your first investment tip of the week by Crew Investing, simply go to Crew TV. It's on YouTube. We never wanted to be on YouTube, but it's so successful right now. There's plenty of tips, and those tips are simply there to either save you a bucket load of money or make you money. So I'll put the link in for the YouTube channel in a little bit.
So that's our real estate tip of the week. How do you find the money to start investing in real estate?